Hi there, we're going to take a look at another of our series of multiple choice revision questions. This one is a new A-level question on inflation, jobs and trade. Trade in this case measured by the size of the current account surplus. So here's the question. An economy is said to be experiencing economic growth. What will be the effect on its rate of inflation, level of unemployment and current account surplus? Have a think about your answer. Press the pause button. I'll be back in a few seconds with the answer and an explanation. And your answer is what? Well, the correct answer to this question is D. In all three cases, the effect on inflation, on jobs and the current account surplus is uncertain. Let's work through the reasoning. Let's take A first of all. Well, inflation is likely to rise in times of fast growth. It's not likely to be lower when growth is strong. We typically see both demand pull and cost push inflation when the economy is growing strongly. So A is wrong. B, the current account surplus actually declines as import demand rises. So although we'd expect to see higher inflation and lower unemployment, the current account surplus would actually likely worsen. In other words, it would fall because of the increase in demand for imported components and consumer goods and services. C, yes, we'd expect to see inflation higher, and we're not sure about the current account, but again, unemployment would be unlikely to rise during a boom. In particular, the level of demand-deficient unemployment would be expected to shrink during a period of rapid economic expansion. So D is the correct answer. All three objectives, we could make a case for saying there's a degree of uncertainty about the future direction. Now, we're not asked to evaluate multiple choice questions, but why is it D? Well, will inflation rise or fall? It depends on the pace of actual growth compared to the amount of spare capacity in the economy, the so-called output gap. Will unemployment continue to fall? Well, it depends on whether unemployment is actually already close to the natural rate of unemployment. And with the current account surplus, will there be an improvement or a deterioration in the current account position? Well, again, it depends on the causes of the faster growth. You can make a case for saying that the stronger growth could be due to a significant boom in exports, for example, which of course is an injection into the circular flow. So you could have faster growth and an improved trade balance at the same time. For these reasons, the correct answer is D. All three objectives are uncertain, even during a period of strong economic growth.